Hey, this is Justin with daytradethemarkets.com, and in this brief video I want to talk about the key clue that we use and talk about to determine whether a market is likely to break out and if a test of the high or low of the day is likely to be, quote, real, or if a market is more likely to be slow and choppy and there's not going to be much happening. And that clue is whether or not there is a level 3, what we call a level 3 or an extreme aggression bar on the high or low of the day at the time that it happens. And just as a little bit of a refresher, if you're not too familiar with relative aggression bars, and there are some videos on our site that you can check out, relative aggression bars are telling us they're looking inside the price bar, for example, to look at the order flow, the real-time market data to see, number one, which side, buyers or sellers, is more aggressive at a given moment, because it's actually aggression that moves the market. If neither side, buyers or sellers, is more aggressive, a market's just going to sit there. Whereas if a market is collectively more aggressive on the buy or sell side, it's going to move up or down respectively. And not only that, you can get that with just some raw data, but this is actually going to help you see to what degree, is it moderate, is it strong, or is it extreme, that aggression is coming into the market. So we've got level 1, level 2, and level 3, strong, extreme, moderate, both buying and selling aggression bars. And the real key here, and what I've done is I'm going to look at a couple markets and strip it of everything except for these level 3 aggression bars. These are kind of they don't happen all that often, but when they do, we really want to pay attention, especially if they happen on the high or low of the day. Okay, so let's just look at an example today as an example. So here is the corn market from today, and this had a nice move down. Okay, and again, I've stripped off everything from this chart. I took off the filter, I took off the real-time support resistance, I've taken off the decelerations, I've taken off the level 1 and level 2 bars. All I've left are these level 3 or extreme buying and selling aggression bars. And just to counter that, here is the ES from today, which basically over the last 6 hours or so had a range of about 2 or 3 points. Okay, so this market did absolutely nothing, and you can see that today there were absolutely no level 3 buying or selling aggression bars. Okay, so that's a pretty good sign, especially when we made new highs of the day at any given time. When we would make new highs, they weren't on level 3 buying or selling aggression bars. And that's a telltale clue this market's not likely to break out in any meaningful way. Whereas if you compare that with the corn market from today, you can see early on when we made a new low, it was made with a level 3 selling aggression bar. We tried to have a little bit of a reaction with what we call level 3 buying aggression bars. Those were quickly rejected. You can see those lows were taken out, and then we made new lows with level 3 selling aggression, and it just kept on moving downward at that point. So again, when we have, this is, like I said, the first clue that we look at, or the first major point that we want to look for if a market is likely to break out and if there's likely to be a good opportunity in that market for that day, at least on the go with side of the coin. Certainly you can trade choppy markets and do more of a fade type of a strategy, but for momentum type trades, trend type trades, go with type trades, the first clue we want to look for is when a new high or low of the day is it made with extreme aggression. Okay, now not every single time, I think this is an interesting point, but not every single time a level 3 bar is on a high or low of the day, it's not going to necessarily lead to a huge move every time, but you're rarely, if ever, going to see a huge move that doesn't start with a level 3 selling aggression bar. So what I'm saying is these aren't 100%, but it's a very good, you're increasing your edge, you're increasing your chances, you're helping yourself make better sense of whether there's actually some real aggression in this market, and that's what actually moves the market. So when you get extreme aggression on the high or low of the day, and there's some follow through especially, it's a very good sign that there's some opportunity in this market. Whereas if you get a day where nothing's happening, when highs and lows of the day are formed, it's a pretty good indication that this is a pretty choppy, not much going on. And certainly that can happen on the first half of the day, and we, for example, have a breakout on some extreme aggression, then we might have a move higher. In this case, it was showing that when we were making new highs, there wasn't much there. So be careful, be wary of jumping on board a breakout type of a situation. So hopefully that makes sense. Again, that's just kind of the first clue, first building block in terms of trying to make sense of whether a market's likely to break out or whether it's more likely to stay contained. If you have any questions about that, certainly let us know. And again, I didn't put everything else on the chart, just kind of try to simplify it to make sense of that. If you have any questions about that, certainly let us know, and we'll talk to you soon.